Hello and welcome to our webcast series Sustainability Watch. And today our theme is Community Impact Spectrum, and we will be talking to some very interesting guests. I welcome Annette Jung, the Managing Head of Philips Capital, and she is here today as a member of the Philips Foundation. Welcome to you, Annette.
Thank you, Ruben.
And we have also Stephen Sennels from the European Venture Philanthropy Association, EVPA, and we will be talking very soon with him about impact.
Thank you. Very much looking forward to this very interesting topic. Thank you.
Thank you. Before we get started, let me just explain to you how this webcast works. At any point in time, you can ask questions. Please use the chat box on the bottom left corner of your screen where you see the box below the pictures. You can download the presentations that are being shown in the box next to that chat box. And if at any point in time you would like to see any chart in full screen, on the top there you see 4 arrows direct in every direction. You can click on it. Then you have a full screen view, and if you click on it again, then you're back to this layout. We will be recording this session, and you can share this webcast with your colleagues, and we will make that available in the next couple of working days. You can earn professional development credits, CDP or CPE. You have to provide your email address and specify which one you would like to qualify for. And then during the webcast, you have to click on the pop-ups that occur, and you have to stay online for the entire webcast for that. The credits are only available, of course, on during the live webcast. The Conference Board Global Sustainability Center is providing this webcast series, and it is our mission to support member companies to create long-term value and positive impact through sustainable integration. We use the United Nations Sustainability Development Goals as our guiding framework, and also all responsible standards and frameworks for corporations. We provide fact-based and independent insights, and hope to be of good service for you that way. But now let's get into our subject, and I would like to get started by asking Stephen. Stephen, we've spoken about already impact and value. Can you get us a little bit by setting the context, what that means in the context of corporations?
Sure. Let me start with a data point. Here in Europe, if we take stock, about a couple of weeks ago, we noticed that around more than 50% of the 1 billion plus money, grants, support that was going to COVID came from corporate giving. So I would say that's quite positive. I never expected this high number. That more than half of it would come from the corporate space. It says something about, I would say, the concern of the corporate space for society. The question, of course, is this is a one-off, and it's going to take probably a couple of more months and hopefully not too long. But the big question is how to turn this kind of interest for society and the interest of society for corporates on a more enduring base, on a much longer horizon. So in fact, the big question is how to create sustainable impact at scale. Now, before I kind of give some ideas and some thoughts for reflection, I'd like to share a couple of observations. I think when I started to deal with this topic about 10 years ago, the big question whether doing good while doing business was still out there. And over the last 10 years, I've seen how more and more people start to see how societal value creation can go hand in hand with business value creation, and how businesses can do good for society and how society can be beneficial for the corporation. The big but, however, is that you have to consider this a long-term effort. In the short term, weeks, months, quarters, even a couple of years, very often they are juxtaposed and they don't go together. So it really takes a long-term effort. And more, whether it's the London School of Economics or Harvard or Stanford, they're publicizing clear correlations between the long-term aspiration, the sustainability path of the corporations, and the financial performance, both shareholder value, accounting value, profit they make. But they all agree it's a long-term effort. Second is that if you move to the different sustainability problems, societal problems, environmental issues, social issues, they're very often complex, and they very often go across the boundaries of the traditional silos or the traditional industries. They're multidimensional. It's physical, it's mental, it's public, it's private, but it all takes time, as I said before. And it's very clear as well that one player alone, whether it's a public corporation or a public actor or a private corporation or an NGO, none of us will ever be able to solve it by itself. So we need multi-stakeholder approach. And the most important thing, if we move into sustainability, is that we put the voice of the customer or the beneficiary front and center. Sounds obvious, but I have to confess that the biggest failures I've seen of corporates moving into inclusive business journey or the ones where it was a very much corporate-driven, tech-driven, pretty, I'm going to use a pretty bad word, autistic corporate approach without really feeling and understanding the ecosystem of those people that are in social need or at the bottom of the pyramid. And an inclusive business journey really should put also those underserved populations or this pre-market customers front and center. Now, these are just a couple of observations, but the good news is I think we are at a very nice moment in time, and I'm not referring now to COVID, but on a longer time frame, where I've seen, since 10 years I'm dealing with this topic, where I've seen how from the right-hand side, the classic for-profits, they do understand and they're quite aware that they should embrace this inclusive business journey. They start to see that sustainability should be front and center and at the core of many of their processes. And so what you see happening is that not only corporate volunteering and CSR, but also departments like strategy and innovation, like vision, mission, sustainability, they're all adding to this picture of moving from classic for-profit finance only to what we call purpose-driven finance first. But the same action, the same change is happening at the other side as well, within the corporate ecosystem. And I have to admit I'm talking mainly from a European perspective. We're talking to some US and LATAM and Asia members, but this investigation I'm going to show with you in a minute is mainly based on the European setting. And there as well, over the last couple of years, we've seen that next to corporate foundations, we see corporate impact funds, accelerators, social businesses emerging. And that's what we call corporate social investors. And they start to collaborate. They start to collaborate because they feel and they see that they're glued together in a common vision, mission, in a common purpose, in a common objective to kind of bring together the societal dimension and the business dimension. Let me give you an example. One of our members, Repsol. Repsol is one of the first companies as oil and gas company in the world that set a very clear target. They want to become net zero emission by 2050. So that's quite a challenge for an oil company, and they're rating amongst the top 3 sustainable companies in this oil sector. What did they do over the last couple of years is they used to have a Repsol Foundation, and the Repsol Foundation is a grant-giving entity. They give grants to awareness building, training and capacity building, sharing information, always around the theme of sustainable and inclusive energy transition. So very much related to what Repsol is acting on a daily basis. Some time ago, not too long ago, about half a year ago, they all started to incubate the Repsol Social Impact Fund. And the Repsol Social Impact Fund, in fact, is an investment fund. It's dealing with equity. It's providing loans and equity. It's a 50 million fund, so it's sizable, it's quite big. And they invest in later stage innovations that are also impact driven and focus on this energy transition and also the vulnerable societies that surround this energy transition. And in the middle, incubated by the foundation, they have Repsol Entrepreneurs Fund. And the Repsol Entrepreneurs Fund is a grant-giving facility, so financial but also non-financial support. And they provide seed capital for early stage innovations and startups that are also active in the energy and the mobility sector. So what you see happening is that along the spectrum of impact strategies and along the spectrum of financial instruments, from grants, seed capital, loans, equity, and even beyond that, the Repsol company also has this corporate impact venturing, so also their venturing arm is moving into impact venturing. So this is a nice example which
Stephen, can I just for clarification, when Repsol talks about impact, what would they consider in this context an impact?
Yeah, so as an oil company, of course, environment is crucial. Circular economy is crucial. But I think we all realize that the green revolution and the inequality will go hand in hand. So they're conscious about the fact that they also should close the inequality gap, so that the people that are living in certain surroundings that are hampered by the whole green revolution because they can't afford a hybrid car or they can't afford the more expensive solar panels, that we should not leave those people behind. So it's both environmental circularity as well inclusiveness of people that are affected by this green transition.
Thank you. Sorry for interrupting.
So if we then go to my last slide and some of my conclusions, what we see more and more is that if we truly want to build this long-term, sustainable, impact-driven, business-driven action, then we need both the corporate social investors and the corporation. Why so? Because the corporate social investor, they can provide seed capital, as I showed in the case of Repsol. They can provide bold, risky tolerant, because they give grants, patient capital to build ecosystems. If you see what's happening in the fashion industry, they try to make sure that all the players in the fashion industry, they adopt fair fashion and organic cotton. This is not something one individual company can do, but where multiple companies, through their corporate foundations, can come together and move the needle on the systemic level as well. And so the bold, risk-tolerant patient capital is an instrument which is at the heart of the corporate social investor to provide initial capital for social enterprises, seed capital, and ecosystem building. But also the corporate social investor is very well positioned in between the corporation, understanding the assets of the corporation, and also the whole ecosystem, the social ecosystem, whether it's NGOs, whether it's development finance institutes, whether it's the beneficiaries. They are the go-between between understanding the customer, understanding the social issue, and translating it and linking it to the corporate space. And the corporate actor is very often providing scale. Scale because they're a big machine, they're often present in multi-geographies, there are long-term and very rigorous processes, and they can provide assets. Not only financial assets, but also technology, networks, brand equity, and you name it. And what we see happening is that there is a realization that corporate social investors, together with the corporate actor, can join forces in order to realize this impact mission. And I'm going to end up with a quote of one of our prime members, who's Gilles Vermouth de Roche, Schneider, I think, is recognized by many, many colleagues as a front runner in this space. And I asked him once, Gilles, if your corporation Schneider would ever move to the best inclusive business in class you could even dream about, would you still cater to have a foundation and a corporate impact fund? And he said, Stephen, for sure, because they're at the front end of social innovation, they're at the front end of building system change, and that's why we will ever need them. And that's our thesis. The two come together to create impact, sustainable at scale.
Thank you so much, Stephen. Very, very interesting concept of how these two strong elements can come together. And I would like to pass the baton on to Annette to talk to us from a practitioner's point of view as the representative of a leading foundation, the Philips Foundation. How does that resonate with you, and how do you approach this journey?
Yeah, thank you. Yeah, it resonates very well. And first of all, yeah, good morning, good afternoon, and good evening possibly to everyone joining the webcast. And yeah, I'm really very, very happy that I can join this session today and share with you our company's journey in addressing impact in a quite holistic way. For Philips, impact is access to care. We are committed to contribute to the SDG 3, which is about health and well-being, and 17, which is about partnership for sustainable development, with the overarching goal to contribute to universal health coverage. So our commitment and our brand promise is about improving people's life, to which we have also put targets like 3 billion lives improved by 2030, out of which 400 million in underserved areas. So in order to achieve that challenge, we have a quite integrated approach. And let me start by explaining the approach, let's say, on a kind of a vertical axis, because in the past Philips was possibly known as the provider of high-tech technology in the healthcare space. But over the last years and the last decade, we have really broadened our product and solution portfolio, also a lot through acquisition, to address what we call the total continuum of care, from healthy living to diagnosed treatment, and also aftercare after people leaving the hospital. So that is on the vertical axis, as well as looking at the total referral chain in healthcare. Because if the referral chain is broken, you have quite an issue in providing proper and quality care at the right place and at an affordable price. And that's actually what we see now in the COVID situation, that if the fundament of primary care is not there, then it's a very big challenge to manage the healthcare delivery. So this is how I see it as the kind of vertical axis to make sure we can address the whole spectrum around healthcare. But if you then look also at the, let me call it the vertical angle, and I'm using that little pyramid at the bottom of the slide in the right corner. It's also that we want to address the whole pyramid, if I may say so. So in the past, we have possibly more addressed the upper segment, because of limited product portfolio, limited geographical reach, and also focus on let's say more the commercial side. But now we are seeing how can we really make sure that the whole population is covered and that we can truly contribute to the universal health coverage. So if you look at the triangle in the middle of the slide, we have on the top of it our initiative, the access to care, where we really see, okay, how can we now ensure to have an even broader product portfolio, to have a better reach, but that all in the context of Philips being a stock-listed company that also needs to take care and look at the bottom line, but still see which part of the pyramid can be achieved and addressed as a company. And then you come, of course, to a space and a place where it may not be commercially viable to address certain segments, and that is where then the Philips Foundation would step in, providing healthcare solutions together with partners, also for the bottom of the pyramid. And then let's say the third leg you see is that we also recognize that we as neither as a corporate nor as an individual foundation can achieve and address the universal health coverage in isolation. So what did we do? We started a coalition by engaging with a broader ecosystem that we need to address these global challenges. So we, together with Farm Access and Dahlberg, have set up a group of all kinds of institutions, from corporates to NGOs to, you see, the financial institutions like IFC, you see WHO, all stakeholders you need to drive, and in this particular case, digital and connected care. Because we see if you really want to reach everyone, you need to move to digital and connected to also address and reach people in low resource setting and in more remote areas. Now zooming also a bit in on the journey of the Philips Foundation, and also pretty much also in line with what Stephen just shared, is we have set up the foundation in 2014 to kind of bring our local and quite scattered initiatives in the CSR area under one roof, and focus it also more around the core of our company, and addressing also access to care. Whereas in the past we could have locally addressed education or other topics. So also here we had an alignment with the company's mission and vision, obviously also contributing to the company's pledge, contributing obviously to the same SDGs. And my last point, also mentioned by Stephen, is closely engaging and interlinking the assets we have in our company for the work the foundation is doing. The foundation has a limited budget, we have a limited team, but we have very, very big assets in our company. People, solutions, products. And that is what we bring in to the foundation's work to address in particular the bottom of the pyramid. And it's very enriching and meaningful for the recipients, like NGOs, like social entrepreneurs, but it is also highly, highly energizing for the workforce of Philips as a corporate. So that also brings a lot of added value and motivation to both sides, the foundation and the company. So that is what I wanted to share, and if you have any questions, I'm happy to answer.
Yeah, thank you so much, Annette. And I would like to encourage our audience to just write down little or even longer questions. And I see somebody is already doing that. So please do. Anything that comes to your mind you would like to ask our experts, feel free to ask these questions. Annette, before I come back to Stephen, because I think he's done a piece of very interesting research I would like to cover. he used quite a provocative word, the autistic approach of corporations to the bottom of the pyramid. How at Philips do you make sure that it's relevant what you do rather than, you know, just being well-meaning? I think that's what he was referring to.
Yeah, perhaps to share one example. If you look in the area of primary health care in Africa, and that's also where I'm deeply involved. It's already a journey of a few years where the company is investing in developing solutions for really also the rural areas, and that's also quite investment, but still on the corporate side, to develop solutions, to develop products. And when we engage there, what we call it the co-creation. So really we have workshop sessions with the local stakeholders from the community, the region, the county, whatever it is, to make sure that whatever we develop is really also embraced and supported from there. And we have cases where we then jointly developed a certain approach, which often also involves kind of new business models in the sense of healthcare delivery, and where you also want in the first phase to have a proof of concept, and then certain areas is then a bridge too far for the corporate to invest and to go into, and that is where the foundation came in co-funding the proof of concept phase. But that is one example I could give where we really bring in all angles within foundation, corporate, but also external stakeholders, because it's really quite heavy to change certain models and healthcare delivery models.
Thank you. That's really interesting. We're in this field of corporation and foundation, and we'll come back to that. But I got a bit of a philosophical question. If the case for pursuing social impact is clear, why aren't more companies actively pursuing social impact? Stephen, any thoughts about that question?
There's shareholders out there.
Yes, it's indeed about shareholder value and stakeholder value. But I think if you would talk to many of the business people as individuals, the social business case or the social value and the business value, they can see how it comes together. But if you step back in your company and you're a CXO or a senior manager, well, it's still hard today to sometimes have the ability to think long term. And by long term, I mean really beyond the quarter, beyond 2 years, beyond 3 years. That's definitely one thing. So this time horizon is not an easy thing, because we are on the stock exchange, we have incentives, we have business incentives, we want to have our bonus end of year. So there are so many mechanisms that once we shifted the mind from shareholders to stakeholders, the operating processes that are underlying have not yet changed. So they're not geared towards the long term. And I'm just mentioning two. It's the reporting and it's the incentives and the bonuses. So the mindset is there, but the processes and incentives are not yet aligned with the long term. Second thing is that, and Annette showed that very nicely, it's also, and sorry, forgive me to use that word, autistic, of course, I mean it, as you were saying, Uwe, in a more friendly manner, but societal environmental issues are so intertwined. So collaboration, coming together is key. But that's not easy if you want to move fast. There is this very nice proverb, if you want to go fast, go alone. If you want to go far, just go together. But you need the patience back again to go together. And that's, I'm not saying it's not in the DNA of the corporation, but it's just difficult per se. So although the aspirational philosophical discussion is over. It was not over 10 years ago. When I started the discussion, it was still a debate whether doing business and doing good could go hand in hand. That philosophical discussion is over, but the practicalities, the instruments, the strategies, the activities, the processes are not yet tuned into that vision.
Yeah, I think also sometimes it requires also additional stakeholders to create the impact. So often it's also not one stakeholder on its own, like Philips, and what we, for example, in the healthcare space also see, if you increase access to care and if you increase access to quality care, that means the more people get good care, the more expensive it gets for the government. So sometimes there's also quite conflicting elements in it you need to solve and overcome.
Yeah. And as you say, Annette, you're also reshaping the boundaries of what is traditionally meant by what is an industry. Because if you talk about the car manufacturer, they were in the car manufacturing industry for so long, but if they have to move to mobility, all of a sudden, completely different players come into that space. The same if you are about healthcare and you all of a sudden move into healthcare solutions, or if you're in food and all of a sudden you move into healthy living, it's a complete different game. So also that shift takes time and has a lot of implications for processes and operations.
I have to read this question here, and I'm not quite sure what Jaume Cobella Lopez is saying. Social impact and social value seem to be a barrier to deliver business and generate profits. Don't you think that it is an enabler for long-term and sustainability profits as well? So I guess the point is about the balance, yeah? Barrier and enabler.
Yeah. The question indeed is about ends and means. I think what we start to see is that in the short term, very often they are a bit juxtaposed. Oh, they could be juxtaposed, not necessarily, but they could be juxtaposed on the short term. So your societal mission and your business mission, because you have to invest, you have to discover a new market, you have to change your distribution channels, and so on and so forth. The good news is that hard facts start to show, as I was saying, Harvard Business, London School of Economics, and also some of the big like Moody's and Bloomberg, they start to show that there is a clear correlation between the corporations in certain sectors that are outperforming their colleagues on financial criteria, shareholder value and accounting value and profits, and the sustainability level they kind of realize. And this positive correlation, I think, is proving that they can go together. But as I said in the beginning, it is only at a certain time horizon that they do come together.
Yeah. Gretchen Winter is asking Annette, how do you measure progress towards the goals that you've been setting yourself?
If I take the example of lives improved, so that is how we measure impact. So we have a quite sophisticated formula how to measure that, but actually that formula is also externally audited, and it is in line with really the highest standards in that respect. And that's what we are measuring. So we have the target of 3 billion people by 2030, and I think last year we had 1.6 something billion. So there's still quite a long way to go, but that is how we in particular measure this impact KPI next to many other measures, of course. But we are very serious about it. So that's not just a number we have put there. So also this access to care team I was mentioning is now it belongs to the strategy group, and is now really looking, okay, what do we need to do to achieve that number in terms of product portfolio in terms of different geographical reach and the like.
And if I can, I see that question as well on impact measurement. I heard, and I take it for granted, I didn't verify, but I heard that about 150 years ago, the performance of companies was not measured according to the financial accounts. So even the whole concept of financial performance is something which is relatively new. It's only after the big bust in the 1930s that we were taking the financial accounts of companies very seriously. And with accountants and auditors, we kind of start to trust them. The same is happening with measuring impact and measuring societal and environmental impact. If you see what the IFC is doing, IFC, part of the World Bank, they are launching operating principles for impact management. If you take others, IBAN is now working as well, together with the UNDP and the UN Global Compact and the World Economic Forum, on principles how to measure and manage and really define metrics. What is an inclusive business and how do they progress? Is it perfect? No, it's not perfect. Is it going the right direction? Yes. So probably and hopefully it will not take another 150 years, but what we see is that there are many serious initiatives also to capture and define proxies to see what is impact. And that will come alongside our financial accounts. And the last thing maybe to mention on that is Harvard is on a journey, very interesting journey. They call it the impact-weighted accounts. And the impact-weighted accounts, they already assessed 100 companies where they kind of revise the financial accounts into impact-weighted accounts. So a lot of very strong initiatives that kind of move the bar into measuring impact.
Yeah, thank you. I have a question, but I want to mention also there is the Value Balancing Alliance, of course, who want to create a methodology with all the large accounting firms together on evaluating the total impact of a corporation. So that space is moving, that's for sure. The question for you, Stephen, is can you name some other organizations, because they feel it's great that Philips, Alexandra is saying it's great that Philips has this externally audited. Are other organizations also doing this external auditing of social impact?
Yes, there is Puma, there is Danone, and a couple of others, not always in the same way, but you might have heard that Danone, a couple of weeks ago, they adopted formally as their formal incubation, as their formal structure, being a social company. So in France, now they put in the law that you can position yourself as, I forgot the right term, but as a socially conscious company. And that comes with accounting rules and outside verification. So there as well you see that even in incubating and legal structures, and in Holland as well, you know, Annette, that the social enterprise a couple of weeks ago by the Dutch government has been adopted. We still have to see what comes out. But more and more legislation is moving into that direction. And if legislation moves into that direction of a socially conscious business, also accounting and transparency is moving alongside.
I have a number of questions here on the measurement. This is obviously something that interests our audience very much, so let's spend some more time on it. Annette, you've already outlined it. Can you be a little bit more, even more specific? Can you take a concrete case where you've done something and how you've done the measurement to really be quite specific, because that's usually quite instructive.
Let me try to because I'm not part of the measurement as such, but it is looking about for example that we install certain pieces of equipment, ultrasound, X-rays, and then there's data points and that is really quite sophisticated because it goes really on country level and is it rural, is it urban? So how many people are then typically diagnosed with such a piece of equipment, and that is then how you add up the numbers. But as I said, it's quite a tested formula and audited. But it's about, for example, looking at a certain piece of equipment being installed, and then how many, let's say, patient benefit because they get a diagnosis.
Sure.
By getting a CT scan, or that is an example how this is measured.
Yep. No, thank you. That I think that explains it. Stephen, I don't know how familiar you are with the measurement at Repsol, but you use that example. Do you have something there, or?
No, unfortunately, no. I don't have.
No, but it's not your company, so I wasn't expecting that. So let's see the next question. Even in wealthy countries, we've seen disparities in healthcare among classes during the COVID crisis, e.g. low income, and minorities are impacted more than others. Has the COVID pandemic changed Philips' approach to universal healthcare coverage, including in wealthy countries?
I don't think it has changed it. I think it made obvious what was already there. So that and that's also the 400 million people we define that as underserved areas, right? So it's and that can be in any country. So we also know that in very mature countries, in certain more remote areas, that access to a general practitioner is also often not so easy. So I think it was already there, because the underserved areas can be in any, say, country. I think the COVID just showed again what I mentioned, that if your primary health system is not working well, then it is hitting you even harder. And I think that is where we now also see that when we talk to donors and investors, that this whole health is getting so much higher on the agenda, because I mean there is of course the immediate help needed because of COVID, but it also really lays or shows very directly where things are kind of broken or never existed. So we also see that there's also much more focus of investors and really big investors and donors on healthcare.
Yeah. Maybe I also could give an example. Is that okay?
Yeah, sure, please.
Because what we see happening is that COVID-19, first of all, has magnified, as Annette was saying, magnified some of the issues. And at, of course, a more conceptual level, it's clear how corporates are a very important part of society, but also how a healthy and thriving society is so important for corporates. So it magnifies this gap, if that ever existed. But also it accelerates many things. And in health, for example, in many of our Western countries, telemedicine and teleconsultations was not reimbursed by the government. You had to have a physical visit before it was reimbursed by the government. Now, at least I can talk about Belgium. We've been working on that for many, many years. And now with COVID, in a matter of literally weeks, telemedicine is approved by government and it's reimbursed. And telemedicine, as you might know, creates also the option to provide quality healthcare in remote spaces, not only far away in the south, but also in areas in France where GPs are not traveling anymore, and so on and so forth. So I think this is a good example where COVID accelerated very much accessibility of, for example, in this case, good healthcare.
Yeah, and you sometimes now even took solutions from more developing in emerging markets into mature markets. So it's just kind of the reverse of what you may typically see, because there, because of distances, it was already more remote or telehealth sometimes. So that's also quite interesting to see that is something you may not typically expect to happen, right?
Absolutely. Thanks for sharing that example. Stephen, I would like to use the time also to expand a little bit in this direction of foundation corporation. You've already mentioned that. I know EVPA has done some research on that. Can you share a little bit more about the tension and the opportunity?
Yeah, interesting question, Owen. And I would recommend, and I think we can share the link with the article in the Stanford Social Innovation Review. So people who want to read it, it's public. They also can go to our website. But coming back to your question, there is no one size fits all. That's clear. There is clearly, if you're a corporate foundation, you have a social mission, and you should put your social additionality front and center. That's why you exist. You should create additional societal value. And as I said before, in the shorter term, that sometimes sits a bit awkward with the supply chain and the daily business of the corporation. So what we said is, or what we figured out together with Philips and many other of our members, is there are different categories of strategies, typologies you can pursue. You can pursue what we call a non-material alignment with your affiliated company, which means that you aspire the same vision, but you're, for the rest, quite independent in how you define as a corporate foundation, where you're active, how you're active, and so on and so forth. So a lot of liberty and a lot of disconnection. Sometimes it has to do also with tax regulations and other things that come about. But what we see is that other corporate foundations like Trafigura and some others, they align on a certain thematic which is material for the corporation. For example, CO2 footprint. Trafigura is a trader, a lot of traffic, so CO2 emission is clearly very important. But the corporate foundation is then taking it beyond the corporation. It's making the CO2 footprint by ships and all of that much more accessible to many more than only their corporation, even beyond the sector. And so the Trafigura Foundation invests a lot in how to monitor and manage the CO2 footprint in traffic. And the company is benefiting, but also many more are benefiting as well. So that's pushing forward a certain thematic which is material for the company. That's what we call thematic alignment. Industry alignment is those corporate foundations that want to shift the needle on the ecosystem of the industry, like fashion for good, organic cotton, access to affordable healthcare. And the big advantage of a corporate foundation is that they can easily team up with colleagues, other corporate foundations, which sometimes is more difficult for the corporation because they're competitors, and I know we sometimes call them our friends or their colleagues, but in reality they're competitors. For the corporate foundations, often that kind of direct competition does not exist. So the closer you come to the company, there is a barrier, an end to how close you come due to legislation and tax. And the next step, what we see IKEA doing, what we see Schneider doing, is they incubate an impact fund or they incubate a social business. Because IKEA social enterprises, they support and foster social entrepreneurs and their innovation, which is relevant for the supply chain of the company. And that's what we call business alignment. It's still striving for societal additionality and impact, but you come close to the value chain of the business. So that kind of scala and choices you have is something we're investigating.
Thanks, Stephen. How does that relate to what you're doing? Because basically, Annette, you live in both worlds, don't you?
Yeah, but I mean we are as Stephen said, closely aligned. So also in terms of vision and mission, contributing to access to care. So from that point, closely aligned. Also, as I said, using on the foundation side the assets of our company in terms of people expertise. And there's the line which is set by the fiscal authority. So as a foundation in the Netherlands, we cannot support any initiative or project that leads to or brings business to the Philips corporate. So that is the line, and that is also why we typically play, for example, in very early stage development of new business models and the like, because that's an area which is, from a business point of view, not yet commercially viable, and also say a potential risk of failure.
But the impact investment is also a route, isn't it?
Yeah, on the Philips Foundation side, we are just taking the first steps away from pure grants and donations. So we are now also assessing to invest, whereas the term investment for us is anything different than donation. So meaning to expect some money to come back. So in the first steps, we are providing loans or repayable grants, and so we are just now busy in defining the investment policy guidelines. So what we need to do that, but we also have already some specific investment cases we just recently reviewed and provided in principle approval. So that are our very first steps in the area of investing in the foundation.
Stephen, I just heard that Annette says that they're in the early stages, but I heard you speak that this is an increasing tendency for that space between corporations and foundations. Is that something that will increase?
This is the research we are currently conducting, so by the end of the year you will have a more precise answer. But to give you a first flavor of what we see happening, I can tell you that if 3-4 years ago we were talking about strategic alignment between a corporate foundation and a corporation, for many, and I'm talking about the European setting, for many this was still uncharted territory. They felt a bit uneasy in dealing with this concept. What we've seen literally in the last 2 years is that Repsol, Danone, Schneider, Essilor, IKEA, all of them, they start, as Philips is doing, exploring different instruments, different impact strategies. So not only grant giving, but investing loans or equity in social enterprises, in social innovation. So the last 2-3 years, we've seen a tremendous acceleration going there, and some big players are moving forward in exploring. I would say 5 years ago, the corporate foundation was living on Venus and the corporation was living on Mars. Different language, different space, different angle, different lens, and so on and so forth. They've seen that while we were discussing doing good while doing business is coming together, there was this gap in between. And now they're exploring how they can fill this gap within the ecosystem of the corporation. And that's exactly what's happening.
Interesting. Would you say there are some preferred instruments, or is giving some sort of loan more preferred to real investment projects, or do you think these are equal instruments?
Yeah, for us, we call the space of EVPA investors for impact, which means that we take the impact dimension first and then re-engineer, back-engineer what financial instruments are most suited. And so they're all equal. We see grants playing different roles. We see grants playing a role when it's a real public good. We see grants playing a role as seed capital, and we see grants playing a role to build infrastructure, shifting the mindset, providing long-term ecosystems and so on. Once you come to the more operational activities, you have the tendency to move into more instruments like loans and early stage equity, because you invest in early stage innovations. And the more you move into, let's say, the mainstream, you then go to commercial financial instruments. And I don't know, Annette, I don't know you that well, but what we see happening is, for example, other companies are also exploring with corporate impact venturing. As I said, Repsol was doing, is the historic corporate venturing arm that was out for corporate innovations is now also tuned towards corporate impact venturing, which is large-scale equity investments in social innovations that have an impact dimension, but also a direct business value. And that's where corporate impact venturing is emerging right now.
I have one more question because we're coming closer to the end. Catherine Boyce is asking, it was already shared that there's a role to play for governments as well by setting up legislation on socially conscious business. Where there is a need for corporates to jump in and invest in solving social issues, do you see best practices that later on have been adopted or integrated by governments? Because at scale, can maybe only achieved if governments are taking over. What is your view on that?
The way we normally approach this is that for the different challenges we have, take the environmental challenge. On the environmental challenge, when we once started to talk about this 30, 40 years ago, it was very early stage. It were activists and we needed legislation, and we still need legislation to push forward the bar. But it has become clear that with solar panels, renewable energy, wastewater, it has become clear that you can also incubate it in your commercial business model. So at a certain moment in time, certain societal challenges can only be addressed as a public good by public authorities. And some of them will always only be able to be addressed by public authorities and scaled by public authorities, like democracy, free press, fact-based press, and these kind of things. There are other social challenges like access to healthcare, prevention, and so on and so forth, where we think the market is a better lever to scale. So it's not either or. It's much more, what is your social challenge? Is it a public good, or can the market provide an option? If it's a public good, then the public authorities should be there to scale. If it's more viable for commercial traction, then probably the company is best to scale, and then the public should be the regulator.
Annette, how do you see it?
No, I agree with what Steven says, and I think also you need the public. So either it's on the policy side for policy change, or I mean to really come to what we also call the system change. You need somewhere government, and if it's changing, say, the policy, or taking over a different proven system of, for example, healthcare delivery, that could be both. So depending again on the setting. But in primary care, we see that this is very challenging to achieve for all on a private basis. So,
thank you so much. Sadly, we've already come to the more or less to the end. There's so much more we could discuss, and I would like to thank also the audience to provide such interesting questions that triggered a good debate. And I would like to thank you, Annette, for providing us with insights on how you're doing it and auditing it as well. I think that sparked a lot of good initiatives already. And Steven, thank you for giving us the overview, and hope to be able to speak to you soon again. And for our audience, we have now Let's Talk Sustainable Business podcast, which you can listen to, and quite very adequate to this debate. I had a conversation with the CEO of Natura on their purpose and how that purpose has helped driving that company. So please feel free to listen to those podcasts, and we will have a webcast again in September. bear with us. We have a little break in August, and then we'll be back for you. But please give us feedback on this webcast. That helps us to improve our performance and our service to you. Thank you so much, and goodbye for today.
Thank you. Bye.
Thank you. Bye, Annette.
Bye.
Okay.